Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, February the 9th, 2022. Another very bullish day today in the markets. The NASDAQ did manage to break above that resistance at 14,925 and got above 15,000, as I had suggested it likely would do if it broke above that 14,925 area. And it did take a little bit of time. It got a little bit above it, dropped back below it, got above it, dropped back below it. But eventually it did push, and then it pushed with greater strength, getting itself above 15,000 and then above that 15,030 resistance level. So that leaves us in the next level, excuse me, at 15,096 to 15,100. And the market does have the ability or the potential to go above that level. We had a very strong rally today with the markets being up pretty high. The NASDAQ was basically up over 300. The Dow was up over 300, and the S&P was up over 60. So those are very strong gains. But we have also now seen where each one of those markets can decline in double digits. So in other words, it's like if the NASDAQ doubled, we just saw last week a day where the market was down 600 points. That was just before Amazon reported their earnings. So that's only just last week. We also saw that the Dow could drop 600 to 700 to 800 points in one session. The S&P can drop 100 points in one session. And so as I continue to say, that the markets will and are operating under higher volatility. Now, I know that volatility, when we're discussing options, does refer to premium in the options pricing. But volatility in the futures market also deals with pricing, but it just pushes a particular move with greater force, either upside or downside. And that's to our advantages as traders of these indexes. Because as a day trader, I love the volatility going in both directions because that allows me to trade more. And also, should I be incorrect on a particular trade and I take a loss, if I quickly get out of that loss and then turn around, I normally can make back the amount that I just lost plus additional profit to cover the trade. It allows greater opportunities to participate in the market. It produces more entry levels. It also allows us to gauge where a trade would then become negated, and allows us to get out of the trade and turn around and participate in the direction that's going, or at least reassess what's going on in the market at that moment. So the volatility in this case is our friend. Now, what can we expect from the NASDAQ tomorrow? Mind you, I have labeled this as a completed C and a completed B wave, but that does not by any means give up the right of the market to go above this level, which is 15,253. And to get above that level, another day like we had today, and we're there. Now, what stands in front of that is that we have the CPI and the jobless claims coming out tomorrow morning before the market opens. So, but that's not to say that the S&P and the NASDAQ can go above their respective top levels to contain a particular wave count. So the NASDAQ certainly overnight can end up above 15,250, 260, right there, 15,260, which is the high from the Globex session on February the 2nd. So here we are, then determining, does that negate the B wave? No, it doesn't. It just forces me to recount what actually has taken place, in which case it likely would be 1, 2, and then we get a 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. And then an ABC down, this is a fourth wave. And then 4 of C, and now 1 of C, 2 of C, 3 of C, excuse me, 1 of 5 of C, 2 of 5 of C, 3 of 5 of C, et cetera, and we can just move on. And right now, if this is a third wave, it certainly is fitting quite cleanly. Now, understandably, that the previous count, which still actually does remain in the alternate position right now, that if this ended that intermediate fourth wave, this is wave 1, this is wave 2, then we're in a 1, 2, 3, 4, 5 of 3. But then again, if we're in this larger minor third wave, I'd really have to consider this just basically almost subminute. So again, we're not moving with the intensity and the speed at which I would be looking for to put this as minor wave 1 of intermediate wave 5, to put this as minor wave 2 of intermediate wave 5, and put this as the first 3 waves, like 1, 2, and 3, of minor wave 3. Because that would suggest we go down and we've got to blast. We still have to blast. Remember what I had said, it's like from this point is where I was like, the market needs to move and get itself above 15,030, 50,000, 15,100 pretty quickly. Now, granted, it basically has, but not not as I would expect a third wave to unfold. So I keep that alive. I can't deny or discard that potential. It does remain, but I'm not actually expecting it right now. So the market can always toss a curveball and can always show us that, nope, this is exactly what our intent was. And then we will revert back over to a more bullish count and be looking again for the market. But right now, remember, B waves can be very, very deceptive. A B wave actually, not that I would expect it to go up to the top, but we certainly can get back towards 16,000 within a B wave. And let me take this out to the 4-hour chart, and we'll just kind of take a look at it to see if this is going to be where I believe that's where I'm calling the end, our top, our high of highs. And then we have an ABC down that formed that intermediate wave A. So if this again was only I'd have to reduce this to a minute wave A, minute wave B, minute wave C, and then put an minor wave A here, and then a minor wave B here. And then we're in a minor C wave, which would then be expected to go much higher. In fact, if that's the case, I will just put on, I'm going to leave those there so that I can reference them. If I then have to go from here, let's go, there we go, to here, and bring it down to here. If this is the case, all right, let's go right back there. Come on, thank you. Then we're actually looking, here we are, 15,916 is where wave C would be equal to wave A, if this is the case. So again, I can give you the Fibonacci and we can fill in the count, but please remember that these counts are fluid because the market is fluid. I depend on the market to tell me what its intents are. But when I have to interpret these declines and I am interpreting these rallies, then that's the choices that I will make. Now, so I still believe that this is an intermediate A wave, and that I really don't look for a continued intermediate fifth wave up. And not, again, it's sitting in the alternate position, so it can move forward if the market tells us. Right now, the market's telling me that we've got a lot of new money that just came in and we're pushing it in, and we're returning to some bullish postures due to some of the earnings reports that have came out today. Disney reported, they're reporting well. Twilio came out, which is not a member of the NASDAQ, but composite, I believe it is. And therefore, it added a little bit of an extra boost at the end of the day to the futures. So a lot of things still kind of coming in and going on. And that could produce a higher mark here in our B wave. Now, understanding we're only at 15,052, and we have a possibility of adding an additional 900 points. Now, what's going to take it to get there is that tomorrow's CPI number and those jobless claims have to be stellar and so bullish that all bearish thought is moved off. All thought that the Fed's going to raise ever has to be taken off the table, so that they just come back in and everybody's going to push. Now, could that happen? Yes. Could the market go up 900? That I've not seen in the NASDAQ, but we've seen 600 to the downside. Why couldn't it do 600 to the upside? That'd put us up here, if that's the intent. And in that case, that's going to make this third wave look a whole lot different. Okay, so what can I expect for tomorrow? First, I'm going to take this off. No, I want to move it. There. Now, let's go back to the hourly chart. Again, we have room to go up to our high for the wave B right now is 15,260. We have resistance at 15,096 to 15,100. Then we have more resistance at 15,200, 15,243. Then we hit 15,260. Above that level, 15,378 and 15,552. Those are what I'm going to leave on for right now. Again, for this market to push up to that level, the numbers that are due tomorrow need to spell or tell a very rosy picture. Now, downside, right now, finally on the hourly chart, the 50 gained speed and now got itself above the 200. So the hourly chart shows the 200, the 50, the 20, the 8, the 4, in alignment to continue the upside. Now let's take a look at the daily picture, see if we can get a confirmation there. Well, no. We still have the 50 up top, the 200 in between, the 20 flat, starting looks like it wants to turn higher, and we've got the 4 and the 8 turning higher. So the market got above the 20 today. That gives us a little bit of a positive spin to the market. Next up would be that 200, and guess where it's sitting? Right below resistance at 15,096. A break there will give another boost to the buyers, bring on more buy pressure, and sellers skirting the markets, getting away from things because they're not going to sell. So again, that's our next move. If we get there overnight, it's still going to produce, hopefully, that same result. Again, then we have the 50 at 15,318. That's what the market on the daily chart needs to do to turn this whole picture more positive. And in the process, the 200 needs to get above the 50, the 20 needs to get above all of that, and these two need to get above everything. So it has to be in alignment where the 200, the 50, the 20, the 8, and the 4. That will turn a very bullish picture on our daily chart. And then we'll be talking about, maybe again, This was only the end of intermediate wave 3. This is intermediate wave 4. And we're off to the races. Right now, that's a lot of work that has to happen to convert what is being interpreted as a more negative aspect for the near term into a positive. Okay, back to that daily, to the hourly chart. So again, for tomorrow, at least overnight, I would anticipate that the Asian markets and the European markets are going to react, and they're going to buy into this. And depending on what their markets do, or they're going to see that we got the CPI number coming out, and maybe they'll start to interpret against what they're doing, and maybe we'll start to head lower. Again, moving lower, I'd be looking here for the break below the 4. A break below the 8 will start to signal that we're dropping down to the 20. A break below the 20 starts to turn the hourly chart a little bit more negative. Below support, a break below the 50 starts again to add another negative tone to the market, and a break below the 200 should shift the day negative. So we're only really looking at about, well, it could drop 300 points, but have we seen that in the NASDAQ? Absolutely. We've seen it go much further than that in a day, in one session. So all this remains on the table. A lot will happen when we find out what those numbers are going to be and how they're going to be interpreted tomorrow. And right now we're starting to still open a little bit higher, but we're now moving a little bit lower, as you can tell. I'm going to leave it there. Trade smart, trade using these moving averages. Keep an eye on that daily chart to see how that picture is changing, either negative or positive. Keep an eye on the hourly chart so you can start to see where things, if they're going to break down, they're going to break down. If they continue higher, the 4 and the 8 are going to guide your trades up. They will follow the rally in a straight line, and usually the 8's going to guide it to where, if it breaks, it could signal that we're going to slip into a down move. All right, trade smart, use all the tools that you have, and the next update will be on Thursday, the 10th.